Global markets continue to rally after Donald Trump's 11th hour tariff reprieve. The European car industry at a crossroads. Can it survive the EV revolution? And just days after posting bumper results, Turkish Airlines revealed it's now the world's third largest carrier. Hello, I'm Oscar Sabakti with the latest business and finance news here on TRT World. Global markets are rebounding after the US President Donald Trump offered a last-minute tariff reprieve. Asian equities are almost higher after Washington announced a one-month delay on tariffs for automakers in Canada and Mexico. Markets in Japan and Hong Kong are seeing gains, while Australia has lagged behind, and bond yields are continuing to climb. With Trump's tariff delays, China's fiscal policy shift and inflation data in focus, investors are watching closely. But what's next for markets? Asian markets have got a boost after Wall Street surged overnight thanks to Trump's tariff delay. Japan's Nikkei and Topix have risen around 1%, while South Korea's Kospi has enjoyed similar gains. China's decision to raise its fiscal deficit to 4% of GDP has sent positive signals to markets. Hong Kong's Seng has jumped around 2%, and while the mainland's CSI 300 added just over 0.5%. This rare policy move suggests Beijing is taking stronger measures to support economic growth. Japan's 10-year government bond yield hit its highest level since 2009, showing tightening financial conditions. Meanwhile, Australia's ASX 200 fell just over 0.5%, bucking regional trends. And inflation concerns remain, with South Korea's consumer prices up 2% year on year, slightly above expectations. Well, let's get more on this now with Wael Makarem. He's a financial market strategist lead at XNES. Really good to have you back with us, Wael. So we're seeing equities continue to rise off the back of Trump's latest decision on tariffs. Tell us more about this rally. Is it just about Washington?
Good morning. Thank you for having me. Actually, yes, there's a big chunk of what's happening related to definitely Trump's decisions. We've seen that since he started initiating that trade war. We've been seeing U.S. stock market close to record, and then when stocks ignited again, and then we saw stocks falling once again. So definitely Trump's decisions are impacting markets, much because they directly affect profitability of companies. However, there are still also other factors that traders or investors need to take into consideration again, starting with U.S. economic data that we're waiting also on Friday or tomorrow, the jobs data, which also could impact sentiment overall.
When we look at Hong Kong and mainland Chinese shares, though, it seems investors there are more focused on what's happening domestically. We know China has raised its fiscal deficit. What does that mean exactly, and what impact will that have?
Actually, raising the fiscal deficit for the highest in almost 3 decades is very bold step, especially that this comes at a time where China has been trying for a while to improve its domestic demand and try to stimulate the economy. So now with Trump coming with tariffs and all this trade war worries around and its impact on the global economy, so China has to shield itself. So that's why they took this bold step, and especially because they have high hopes on reaching a 5% growth target. So in order to reach this target, they have to raise their deficit benchmark in order to meet these expectations. However, there's a bit of a good sentiment coming from the advancements on AI and certain companies that has been performing well during the past few months.
What about bond yields? Because we're seeing they're also climbing in line with equities. What's behind that rise?
Actually, the rise that we've seen in the past 3 days is a bit worrying, especially if we continue moving that way. So because it started mainly with European bond yields. If you look at the German bond yields, they're rising sharply, maybe 0.5% for the past 3 days. And this goes for additional fiscal changes. And this would worry a little bit investors, especially if we continue at this way of incline. So if this continues to be steep, it would be worrying for investors on the long term.
Okay, Wael Makarem, we'll have to leave it there. Great to get your thoughts as always. Thank you. Now, for millions of Japanese, rice is more than just food, it's a daily ritual. But this staple is now under threat. With prices skyrocketing, families are being forced to rethink their meals, and the government is taking drastic measures to keep market shelves stocked. Omar Bakololu reports.
From simple home-cooked meals to world-famous sushi, for centuries, rice has been the foundation of Japanese cuisine. It represents tradition, the hard work of farmers, and a deep-rooted sense of national identity. Yet, ensuring a steady supply of this vital grain has been a challenge. During World War II, the government introduced the Staple Food Control Act of 1942 to prevent food shortages. Then, in 1995, a new law created an emergency rice stockpile designed to be only used in times of disaster. Now, for the first time since that law was passed, that strategic reserve is being tapped. Hot weather, poor harvests, and even panic buying have nearly doubled the price of rice over the past year. The Japanese government says it's releasing 210,000 tons of rice, one-fifth of its emergency reserves, in an effort to stabilize the market.
I still do buy rice occasionally, but since it's so expensive, I sometimes give up on buying it once I see the price.
I'm buying rice less and less frequently, and sometimes replacing it with packaged noodles like udon or yakisoba because they're cheaper.
Following typhoons and rumors of earthquakes, last August, some supermarket shelves were emptied. While the government had hoped new harvests would ease the pressure, inflation has continued, exacerbated by distributors suspected of hoarding supplies and holding out for even higher prices.
This country has experienced a shortage of rice over and over again, like the year 1993, when the cold weather damaged the rice production, but people easily forget how bad it was. And people blindly go for some low-price rice at supermarket without thinking if farmers can really operate sustainably for such prices. If I put in a harsh way, I have to say that people are experiencing a really severe tit for tat.
Tourist consumption also more than doubled over the past year, as the country received a record 37 million sushi-hungry international visitors in 2024. So, whether it's climate change, hoarding, a surging tourist economy, or a combination of all three, Japan's rice crisis shows that even the most fundamental staples are no longer guaranteed. Omar Bakololu, TRT World.
Europe's car industry is facing one of its biggest shake-ups. Electric vehicles are on the rise, cheaper Chinese-made cars are flooding the market, and legacy manufacturers are scrambling to keep up. But it's not just about the cars themselves. It's about jobs, factories, and an entire supply chain that fuels Europe's economy. Just 3 years ago, Chinese-made EVs barely made a dent in Europe's market. Fast forward to 2025, and they now make up more than 20% of all battery electric vehicle sales in the EU. That includes not just Chinese brands, but also big names like Tesla, which manufactures some of its models in China. Petrol-powered cars are still the most popular in Europe, making up just over a third of new car sales last year. But things are changing fast. EVs now account for almost 15% of sales, overtaking diesel for the first time, while hybrids make around a quarter, a sign that more people are making the switch. Europe has long enjoyed a reputation for its world-leading auto sector, but that legacy is now being challenged. With China leading in battery production and EV technology, European manufacturers are under immense pressure to adapt or risk falling behind. And the EU auto industry isn't just about cars. It's about jobs, factories and supply chains that keep millions of people employed. This sector supports around 14 million jobs, making up 6% of total EU employment and accounts for 8% of European value-added manufacturing. With some 255 automotive plants producing around 15 million vehicles last year, the industry's success is crucial. But falling production levels post-pandemic and rising global competition could put this powerhouse at risk. Well, let's get more now with Tom Barnard. He's an automotive journalist and consultant, and he joins us now from Brussels. Really good to have you with us. Now, it's no secret that Chinese-made EVs are booming. They're flooding markets across the world, including in Europe. How should Europe's legacy car makers react to this trend?
Well, yeah, I think that the European car makers are petrified, and rightly so. If we look at just in January, there was a 2% decline in the overall car market in Europe, but the Chinese brands were up 52%. And part of that is because of battery electric vehicles, and the Chinese companies have had an awful lot of investment over the past 2 decades in battery electric technology, which has meant they've got a real leap ahead on the rest of the market. But they're also now building on hybrids and other electric vehicles, and really leaping forward in front of the European makers.
Yes, and we know that consumers are flocking to not only EVs but also hybrids. Do you think that Europe's legacy car makers were too slow to adapt to that and really seize on that trend?
Yeah, I think so. I think also you have to remember that the Chinese had this enormous investment, partly from their government, so they had an advantage from a very early time. And European makers didn't have the same impetus, and they didn't have the same investment. So they went and invested in diesel technology, which was a few years ago thought to be the future because it was a lower CO2 rating, and increasing their petrol efficiency. Now there's a ban on petrol and diesel only cars from 2035. So they're having to roll back all that investment, which has been over more than a century in internal combustion engines, and look at an entirely different way of engineering cars. And that's difficult for them. They've got to find new engineers who know this. They've got to ramp up battery production and ramp down all those other types of technology that they're used to.
Yes, as you say, governments across Europe are looking to move away from petrol and diesel cars for the sake of the climate crisis. So, in a sense, it is in Europe's interest to allow the continued importation of cheaper EVs from China, but we also know that that risks the European car industry. Do you think policymakers in Europe are really grappling with striking a balance between those two aims?
Yeah, that is the big problem for them, is that for reasons of air quality, but also having some sort of security around energy, it's much more preferable to have electric and electrified cars. But that means that they have to try and get the technology there. They have to get these cars from China before the Europeans can catch up. Now, the thought is, will the European manufacturers be able to survive in the time they've got to make all this investment and ramp up their production of electric cars? I think the European manufacturers' main benefit that they've got, and the main advantage they've got over the Chinese, is on their brands. So if you're going to buy a car and you need to go to a party and say, oh, what's your new car? And it's a brand no one's ever heard of, that's a bit of a big ask. So if you're a European manufacturer and you say, oh, I've got a BMW or I've got a Mercedes, people instantly know and they appreciate that brand. So that's the advantage they've got. And we've seen some manufacturers already capitalizing on that with their kind of heritage cars. So you look at Renault, they've just launched the Renault 5, which is a car that looks like something from the 1970s that's been brought bang up to date, and is a really clever car and is in high demand. So that's how they're fighting back, is by building on their brand, building on their history, which is something the Chinese don't have.
When you look at the US, we know since Donald Trump came to office, he's really is looking to ramp up the trade wars by imposing sweeping tariffs, especially on Chinese goods. But even before Trump, the Biden administration imposed a 100% tariff on Chinese EV vehicles being sold in the US. Do you anticipate that Europe might be under pressure to look at similar measures in order to protect its car industry?
Yes, well, we've already seen it on battery electric vehicles, so there's already tariff on pure electric cars. And what we've seen then is that the consumers and the Chinese manufacturers just shift to the hybrid and petrol cars. And that's just going to be just as difficult for the European manufacturers. What I think we will see is that the Chinese manufacturers will invest in Europe in production facilities. So we've already seen that with Stellantis, which has a joint venture with a Chinese company called Leapmotor. And they've started to produce their cheapest car, the T03, in Poland already because it gets around those tariffs. And I think that there will be many other European governments who will be courting the Chinese manufacturers, suggesting that they build their cars in Europe. So the future of the European car industry could actually be Chinese owned, just as happened with the Japanese back in the 1980s.
Really fascinating stuff. Tom Barnard, great to get your thoughts as always. Thank you.
Thank you.
Now, vast megacities in science fiction movies and books may soon become science fact if companies such as Toyota have anything to do with it. The first phase of their sci-fi concept city, where the latest smart devices assist residents to build a new future, has just been completed, and the first 100 residents are due to move in this fall. Pinar Nashasta reports.
From autonomous drones to flying cars, a bold vision in Japan is now one step closer to reality.
Located at the base of beautiful Mount Fuji in Japan, Woven City is more than just a place to live, work, and play. Woven City is a place where people can invent and develop all kinds of new products and ideas.
Phase 1 is now complete, and it will host its first residents later this year. Toyota officials say the systems have already been trialed to integrate drones, interactive robots that assist the elderly, and personal mobility devices like wheelchairs and race bikes.
I believe Toyota has a responsibility to invest in our collective future, to share what we've learned with others, and support new ideas that benefit the planet and its people.
Only low to zero emission and autonomous vehicles are allowed. The project will also invest in reaching for the stars, in collaboration with Japanese startup Interstellar Technologies. Toyota says it does not expect to make any profit out of the Woven project, instead focusing on building the future of mobility. Pinar Nishasta, TRT World.
Now, a quick look at some other top stories from around the world. The European Central Bank is expected to cut interest rates again on Thursday, but it's likely to be the last rate reduction for some time. The move comes amid escalating trade wars and moves to rearm in the wake of the US policy shift on Ukraine. As the economic outlook changes, the ECB faces growing divisions among policymakers over the need for further support. The sell-off in German bonds has spread across global debt markets, pushing yields higher. Japan's yields reached their highest levels in over a decade, while the 40-year yield hit a record high since its debut in 2007. Yields in Australia and New Zealand also surged, with their benchmark 10-year yields both rising about 10 basis points. Alibaba's stock surged 7% after unveiling a new AI model. The company says it performs as well as DeepSeek, but uses far less data. The stock also gained $135 billion in value this year as confidence grows. And President Trump is granting automakers a one-month exemption from new tariffs on Mexico and Canada. The move follows requests from General Motors, Ford and Stellantis to waive the 25% charge on vehicles. The delay pushes the tariffs to May, which automakers say will help avoid economic setbacks. Now, big changes ahead for the UK's fight against the climate crisis, with less red meat, more wind farms and a whole lot of electric vehicles. The government's latest carbon budget is under review, and it could be one of the most ambitious yet. Tulay Kalyon Hasna-Darolu has more from London.
The Climate Change Committee has set out a roadmap on how modest changes, combined with government action, can help the UK achieve net zero emissions by 2050. That means cutting carbon output to just 535 million tonnes over a crucial 5-year period. Wind power will take centre stage, with offshore wind farms growing sixfold by 2040. That's enough energy to power millions of homes. And 3/4 of cars and vans could be electric by then. Big news for drivers, but also for the economy as battery prices keep falling. And for farmers, it's a major transition. The government is being urged to support a shift away from livestock, with cattle and sheep numbers set to drop by over a quarter. But perhaps the most significant shift will be on our plates. The Climate Change Committee says meat consumption should fall by 25%, which means cutting about 260 grams of meat from our diets per person per week. In practical terms, this translates to fewer steaks, burgers, kebabs and full English breakfasts. But can people do without meat?
Probably not. I think we're doing quite well on 2 or 3 times a week, but yes. So because you need a variety in your diet. We're human beings. We can't suddenly, especially when you're older, you can't suddenly change your diet.
It's pretty hard to give up. I think there can be ways around it. But yeah, I don't know, if it'd be synthetic meat or stuff like this, but.
Oh yeah, I'll definitely consume less meat. It's definitely a consideration.
And if you are planning a holiday, airfares could see a hefty price hike. While the aviation sector could expand by 10%, ticket prices are expected to rise by 2040 to offset environmental impacts. But for now, it's over to the government and parliament to decide. Will they back this bold new carbon budget? And how will the public react to these changes? Tülay Kalyon, Haznedaroğlu, TRT World, London.
Turkish Airlines has become the world's third largest airline in international passenger capacity and cargo market share. CEO Bilal Ekşi says the flag carrier gained a 3.4% share of the global international passenger market last year, making it the top airline in Europe. Its cargo division, Turkish Cargo, also rose to third place worldwide with a 5.7% market share. The latest figures come just days after Turkish Airlines released its latest financial results, showing a $2.4 billion net profit in 2024. The US President Trump announced on Monday that Taiwan's chip-making giant TSMC will make an additional investment of $100 billion in the US. It's a move that would strongly back the Trump administration's policy of securing the supply chain for key industries, including rare earth elements and high-tech chips. Kubra Akoç has the story.
During his campaign trail, President Trump said Taiwan should pay more to be defended by the U.S. And now he dodges the questions when asked if his administration would allow China to take Taiwan by force.
I never comment on that. I don't comment on anything because I don't want to ever put myself in that position.
China has increased its military presence around Taiwan, a self-governing territory Beijing sees as a breakaway province. Despite there being no official diplomatic ties between Washington and Taipei, the U.S. has been Taiwan's staunchest ally and arms supplier. Former President Biden once said he would send troops to defend Taiwan. Analysts argue Trump's America First policy and his recent Oval Office blow-up with Ukrainian President Zelensky unnerved Taiwanese officials to rethink their security pact with the U.S.
Maintaining the status quo and peace and stability in the Taiwan Strait is a consensus we have with the United States. We are using deterrence and strength to achieve peace. I believe the U.S. will not give up the Indo-Pacific region.
Then comes Taiwan's TSMC, the world's largest contract chip maker's announcement of an additional $100 billion worth investment in the U.S.
This $100 billion in new investment will go into building 5 cutting-edge fabrication facilities in the great state that we just discussed, Arizona, and will create thousands of jobs, many thousands of jobs.
Many say it's Taiwan's payback for the certain security guarantees it receives from the U.S. against China's aggression. Also, President Trump wants to ensure the U.S.'s dominance in the AI race for the next-generation chip, securing better chips for American companies, and curb the supply of new and more advanced chips to China.
Having these semiconductor chips made on U.S. soil is really, really important because the chips we get from Taiwan, they're always at risk. The Chinese decided that they were going to invade Taiwan. If we don't have access to those chips, we could lose a lot of our economy in a year.
Surely Trump's MAGA spirit in action, For now, this looks like a win-win for both sides. Kübra Akkoç, TRT World.
EU leaders will gather in Brussels later on Thursday for an emergency meeting to discuss the bloc's defence capabilities against Russia. Paul Hawkins reports.
The EU is doing something it's never had to do, gearing up for war.
The European Union's it was formed in order to screw the United States.
Trade wars and actual wars, fast. On Thursday's agenda, 2 questions. Firstly, how do we defend Europe and Ukraine without the Americans? This lady says she has the answer with a plan called Rearm Europe.
Europe is ready to assume its responsibilities. Rearm Europe could mobilize close to 800 billion euros of defense expenditures for a safe and resilient Europe.
How? By making it easier to finance defence spending through loans and grants, while also changing EU spending rules so defence isn't a part of the country's budget. EU leaders will discuss the plan on Thursday with President Zelensky dialing in. They'll also be trying to answer how to respond to this.
April 2nd, reciprocal tariffs kick in, and whatever they tariff us, other countries, we will tariff them.
The EU has a month to come up with a plan, but Brussels isn't known for its speed.
We will also protect our consumers and businesses at every turn. They expect no less from us, and they deserve no less from us.
That was last week. Reciprocal tariffs would require a majority vote from member states. But that could be tricky with some, like this man on the right, Hungary's pro-Trump leader Viktor Orban. Others may be scared about repercussions if they vote for tariffs, while Italy has said countries should respond individually, not within the EU. But whatever the response, the EU is bracing itself for war. Paul Hawkins, TRT World.
And that is your latest business and finance news. Thanks for watching. Bye for now.